Okay, let's just do that really quickly. 520, that's including myself, and we are ready to go. What's up, everyone? It's Caddy with MoneyVest. So, we hit our goal, 520 likes. You just saw me finish the line here, 520. Thank you so much for all those likes. I really appreciate you. So, in this video, we're going to talk about, as promised, ARM Holdings. Sit back, get yourself a nice cup of coffee, tea, whatever it is that you want, and feel comfortable. We're going to break down everything you need to know about ARM Holdings IPO, which is going to be the biggest tech IPO of 2023 so far. So again, thank you so much for joining us. Hope you enjoyed this video, find it helpful. If you do, make sure that you drop a like on this video as well. Subscribe to the channel, and of course, link to our Discord and Patreon is going to be down below if you're interested in joining, getting access to all the buy and sell alerts, options alerts, trade ideas. Everything is going to be included, as well as members-only private videos and the intrinsic value spreadsheets as well. So everything is going to be down in the description below. I do have my dryer going on in the background, so if there is any noise, I do apologize in advance. So let's just dive right into it. First things first, ARM is headed for a $52 billion IPO that's set to draw tech titans like Apple and Nvidia. And here's what to know about the biggest US debut for the year so far in 2023. So ARM's roster of IPO investors include a handful of the world's most recognizable names in tech, and they are poised to scoop up to a total of $735 million in the stock for the IPO. Samsung, Google, Apple, Nvidia, Intel are among those that could participate as cornerstone investors. And other top investors include TSMC, we got Advanced Micro Devices, as well as MediaTek, Cadence, and Synopsys as well. Don't you worry, we're going to break down everything with respect to valuations, intrinsic value. We'll talk about everything what the company does. So this is just me giving you guys a little bit of a preview of what this IPO is going to look like. So $52 billion is the proposed valuation for this company. And that's going to be roughly around $47 to $51 per share. That's the sale price. That's what's expected for it to be going at that IPO price of $47 to $51. And SoftBank, which currently owns the company right now, they acquired this company in 2016, and it's privately held, of course, and it's now starting to go public, will basically offer 95.5 million shares as American depository shares, because this is a company based out of Cambridge, England. So it is an England company. It is a semiconductor chip designer, which again, we will go over specifically where they fit in the semiconductor ecosystem and the food chain. And that's about 10% of the total shares outstanding. Of course, banks are going to make a ton of money on this deal because there's over 28 banks involved that are doing this IPO for SoftBank. And that's 2% of fees that they are charging on, of course, raising upwards of $5.4 billion. So if the company is valued at $52 billion, $54 billion, 10% is what they are issuing to the public. And that's going to be raising capital of upwards of $5.4 billion. And that's about 2% of that is going to go into fees for banks, for 28 banks. That's how it's going to be split. And that's roughly about $100 million for the banks alone. So yes, it is a pretty big deal. It is a pretty significant IPO for the US markets and for a lot of these banks that are involved as well. Now, going over to some of the other aspects of the overall deal, after going public, SoftBank will still retain control of about 90% of ARM's shares. And the final pricing, as well as its trading debut on the NASDAQ exchange, is set for next week, and it will be under the ticker symbol ARM. So that's going to be the ticker symbol for ARM Holdings, and was also mentioned in their filing with the SEC. Proposed NASDAQ symbol of ARM, $52 billion market cap, valuation-wise, and $47 to $51 is going to be the opening IPO price. At least that's what's expected for this American depository receipt. Okay. Let's talk about the company now. Now that we've covered the basics of what the IPO is going to look like, when it's going to launch, most likely sometime next week, the valuation, the price, let's talk about the company itself and whether it is actually worth investing or not in this IPO. So ARM Holdings, as mentioned as ARM, is a British semiconductor and software design company based in Cambridge, England. It is a world's leading provider of processor intellectual property, right? So IP is what they are more specifically focusing on, with its design found in billions of chips every single year. And ARM's chips are used in a wide variety of devices, including smartphones, tablets, laptops, servers, and even cars. So you can imagine why they are in such high demand, because Nvidia, AMD, Apple, a lot of these companies are designers as well. They are fabless designers because they don't actually manufacture a lot of these chips. And ARM Holdings provides a lot of these processor designs, right? So they want to be able to buy these designs from ARM Holdings and, of course, send it over to manufacturing so that they can take advantage of the efficiency of ARM Holdings' designs. So this right here is the ecosystem, or if you want to call it the food chain, of how semiconductor industries work. At the very bottom, we've got the chip intellectual property cores, right? These are the starting point of any semiconductor ecosystem. Then we've got the electronic design automation tools. Then we've got materials and subsystems. Then we've got equipment, wafer fab equipment. Then we got chip companies, right? Designers and fabless companies. And then, of course, we've got foundries, right? Meaning manufacturers, the companies that are actually making these chips. So this is the overall ecosystem. And I'm going to show you exactly where ARM Holdings sits. It actually sits at the very front of the food chain. It actually sits right at the bottom, which is chip intellectual property cores. That's where ARM Holdings is. So semiconductor industry segment. So semiconductor industry has 7 different types of companies, and each of these distinct industry segments feeds into the resources up the value chain to the next unit. Finally, a chip factory or a fab has all the designs, the equipment, and the materials necessary to manufacture the chip. So again, the starting point is the chip intellectual property or IP cores. Then we got electronic design automation, so EDA. We got specialized materials. We got wafer fab equipment, so that's where ASML comes in. We got fabless chip companies. That's where Nvidia's and AMD's and Apple's are sitting. Then we got integrated device manufacturers, IDMs. We got chip foundries, and we got OSATs that are basically outsourced semiconductor assembly and test as well. So going over to this particular sector or segment within the semiconductor industry, which is chip intellectual property core, the design of a chip may be owned by a single company, or some companies license their chip designs as software building blocks called IP cores for a wide variety of uses. And there are over 150 companies that sell chip IP cores. For example, Apple licenses IP cores from ARM as a building block of their microprocessors in their iPhones and computers. So they are, again, at the very bottom of the food chain, meaning they are the starting point for a lot of these chip designers that basically license the IP cores from ARM Holdings, which they then can process and send to the foundries for manufacturing. Of course, we've got wafer fab equipment, companies that we have analyzed before, right? Clack Corporation, we got Lam Research, we've got Electron, we got ASML, one of my positions that I really like, provides lithography equipment that is absolutely essential to produce chips, right? To manufacture chips. So these are some of the most complicated and expensive machines on earth, and they take a slice of an ingot of silicon, manipulate in atoms on and below its surface. And of course, these are machines that physically manufacture chips. Then we got fabless chip companies that don't necessarily have their own foundry or fabs and are basically dependent on other companies such as TSMC, Samsung, companies that are known for manufacturing chips. And of course, these are Apple, Qualcomm, Nvidia, Amazon, Facebook, Advanced Micro Devices, Broadcom, all these companies that do not own wafer fab equipment or use specialized materials or chemicals. They basically use chip IP and electronic design software to design the chips, right? These are basically called designers. And then, of course, other companies come in. That is your integrated device manufacturers. These are companies that both design their own chips and manufacture their own chips, such as Intel. Intel's one of those companies, Analog Devices, another one of those companies, Micron. Some of these companies that basically design and manufacture. But again, we know that Intel is kind of moving in that different direction where they want to be a specific manufacturer now moving forward. And this right here is the last, which is chip foundries, also known as fabs. And these are companies like TSMC and Samsung, biggest, manufacturers in the world for chips. So everything goes to them, materials, equipment, designs, everything goes to these chip foundries, and they're the ones that come up and produce the chips and then sell it to their customers. So this is the overall food chain. And I wanted to go over this more specifically so we have a good idea on where ARM Holdings sits in this overall pyramid of the entire semiconductor industry. So these are the results for the fiscal year ending in March 31st, 2023. So we've got the financials for the last 3 years. We got the total revenue, we got the operating income, we got non-GAAP operating income, we got margins. Margins I'm going to calculate. We got the free cash flow, and of course we got number of chips shipped. We got all these different metrics for us to look into and calculate. I've got a whole spreadsheet which I'm going to go over in just a minute. But these are the numbers. It is a profitable company. Revenue has been growing, but more recently in fiscal year 2023, it was lower compared to last year. And I think there's some cyclicality aspect to it because we know that semiconductor sector has been going through a rough patch. We did go through sort of like a time period where we did pull back, contract in the overall industry. So the expectation would be that starting 2024, 2025, we'll start to see some momentum back up for revenues, earnings, and whatnot. So free cash flow did decline in 2022, but once again, reaccelerating in 2023. Again, we'll talk about all those things later in the video when we go over our spreadsheet. This right here is going to be the cash position for the company. So the company does have pretty good amount of cash and cash equivalents and short-term investments of $2.2 billion, and total liabilities are going to be sitting at $2.8 billion. So after this proposed IPO, then we're expecting closer to $5.4 billion being added to the $2.2 billion. So they're going to be sitting at roughly $7 to $8 billion in cash from the capital that's being raised through sale of equity, and of course the cash that's already on the balance sheet. So their total assets are going to be over $12 billion compared to total liabilities at just under $3 billion. So very, very strong balance sheet here for the company. More cash than I'm assuming the long-term debt's going to be a lot lower. There's no breakdown for total liabilities here, but I'm assuming that, if total liabilities are $2.8 billion, long-term debt's going to be obviously a lot lower than that, and cash debt ratio is going to be close to 1, if not better, and negative net debt for the company. But after this proposed offering in this IPO, they're going to have plenty of cash on the balance sheet. Now, when it comes to artificial intelligence, they specifically had this on their filing with the SEC. They mentioned that as the world moves increasingly towards AI and ML enabled computing, ARM will be central to this transition. ARM CPU already runs on AI and ML workloads in billions of devices, including smartphones, cameras, digital TVs, cars, and cloud data centers. The CPU is vital in all AI systems, whether it is handling the AI workload entirely or in combination with core processors, such as GPUs or an NPU. And we have added new functionality and instructions to accelerate future artificial intelligence and machine learning algorithms. And we are working with leading companies such as Alphabet, Cruise, Mercedes-Benz, Meta, and NVIDIA to deploy ARM technology to run AI workloads. So, of course, it's also going to be an artificial intelligence play because they've got plans of working with these companies to further enhance their functionality with artificial intelligence and machine learning. Okay, so this is where we are with respect to the overall numbers. Okay, I'm actually going to bring up my spreadsheet here once again so that we can calculate the margins as well, because I didn't get a chance to go over the margins before. So what we're going to do is we're going to add another line here, we're going to add another line here, and we're going to add another line over here. And this right here is going to be the margins for gross profit. So we're going to put in GP profit, we're going to put operating income margins, and we're going to put net income margins over here. And all we have to really do is basically take into account the gross profit divided by the revenue. That's going to be about a 93% margin for the company. That's actually pretty strong. And that's only been going up. So 93% went up to 95%, and now we're sitting at over 96% gross margin for this company, which is absolutely insane because a lot of the business model is dependent on licensing their designs and their technology over to other customers that are part of that entire ecosystem with respect to semiconductors that we already went over. This right here is going to be operating income margins. So that's, again, really, really low compared to where the gross margins are sitting, but it has been increasing. So we are now sitting at over 24-25% for operating income margin for the company, and net margins on a GAAP basis is now sitting at around 27-25%, which again is pretty strong in my opinion, and it can only get better from here. And it's sitting at 20% as of 2023. Okay, so when it comes to revenues, they have grown revenues by almost 15% on a compounded annual basis over the last 2 years. But year over year, we did see a decline of almost 1%. Gross profit also has gone up almost 17%. Year over year, it's very, very flat. Operating income has increased 6% year over year and 67% on a compounded annual basis since 2 years ago. Net income is up a little bit over. Actually, net income is down compared to 2021, but if you take a look at non-GAAP net income is up 78% in the last 2 years to just over $657 million. So this right here is the number specifically, and year over year, it is flat or slightly down about 1%. Free cash flow has been very cyclical. So on 2021 to 2022 basis, it did decline 66%. So pretty significant sell-off. And again, we don't have the breakdowns specifically to where the cash was being invested. I'm assuming it's because of a pretty expensive CapEx, which resulted in a significant decline in operating cash flow minus capex, which resulted in a decline in free cash flow. But then, of course, a big increase on a year-over-year basis in 2023, 75%. But on a compounded basis, they are still down from its highs of 2021. Shares outstanding has been flat, so that's good. They're not issuing a lot of shares. Of course, they can't because they're a privately held company. So we'll find out, of course, once they go public, what the plan looks like for shares outstanding. And total cash is up 35% year over year, and total assets are also up 5.5%. Now, this is where the current valuation sits for ARM Holdings. So if you are planning on, let's say, buying at the IPO price, which is going to be $52 billion, that's the proposed IPO valuation. And based on 2023 numbers that we know, the company filed with the SEC, these are numbers that are public. This right here is the current proposed valuation based on the IPO that they're going to do. 99 times earnings, a little under 20 times sales, 7.5 times assets, 23.5 times cash, and over 85 times free cash flow. I didn't expect anything else because it is an IPO. It is a hot trending IPO, and we know what happens with initial public offerings. There's a lot of trend, there's a lot of hype around it, and everyone bids up the price, especially the banks, especially Wall Street likes to do that so that everyone gets hyped up and starts buying stocks at IPO prices, which most certainly come at overvalued levels. That's what happened with Coinbase. That's what happened with tons of SPACs. That's what happened with a lot of companies that gone public at the wrong valuations, and then of course ended up selling off 50 to 60%, if not 70 to 80%. So our goal is to better understand what is the appropriate valuation for the stock and whether it makes sense for us to be a buyer. For me personally, at these valuations, I'm not going to touch it with a 10-foot pole. You guys know me. I'm very conservative in my way of investing, so I like to prefer investing more defensively, having that margin of safety. So this valuation is by all means very, very expensive. I mean, there's no way I'm going to be paying 20 times sales for this company, right? And even though margins are really strong, 93% margins, 96% gross margins, right? Phenomenal. And operating margins are improving over the last 3 years. They've gone up from 11.5% to over 25%. That's a significant amount of operating leverage starting to come in. And operating income's also up. So that's all good news. But it's not going to go on forever, right? You're not going to see consistent growth of 50 to 70, 80% every single year for the next 10 years or 20 years. Of course, there's artificial intelligence and machine learning, big sort of tailwind for a lot of these semiconductor companies. But that being said, there's still valuation has to be considered, and it is still trading at a very, very expensive valuation. In fact, I would say that it's very close to the same valuation that Nvidia is trading at, right? Nvidia right now trades at around a 15, 18 times sales multiple, and of course, over 60 to 80 times earnings multiple. So what's the solution? Of course, we got to do some analysis and better understand what is going to be that appropriate valuation for this company. So what I've done here is I've basically taken into account a growth rate for the net income of about 30%. I've given them a 30 times P multiple, which I think is more than reasonable. It's again, it's a drop of 66% from its 99 P multiple. Free cash flow growth rate of about 25%. Because again, we did see a bit of a decline in 2022, then a reacceleration in 2023. And I think once these companies are on board and we see that public offering, there's more cash to be raised and reinvested back into the business. There's a possibility that revenue, operating income, net income continues to push higher and accelerates to the upside. Price to free cash flow multiple 25. I think that's going to keep our PEG ratio and our price to free cash flow ratio very, very intact at close to 1. So you're basically paying the same multiple for the growth rate for this company. 12% discount rate because there are not going to be any dividends. So if you come back, I think specifically mentioned in one of the slides that there is not going to be any dividends at the moment. So if you come back, there we go. So we are currently do not intend to pay dividends on any ordinary shares or ADS. See the section titled Dividend Policy for more information. So there's no dividends included with this IPO at the moment, even though it's a profitable company, even though it's making good free cash flow, there's no dividends at the moment. So taking into account 12% discount rate, 10% margin of safety, there's little to no share dilution. Again, we'll find out whether that's going to be true after the company goes public, right? It's been a privately held company, so we haven't seen any changes in the shares outstanding. But of course, this number will be calculated over time if they are issuing shares to dilute the shareholders. 50% weighting to earnings, 50% weighting to free cash flow, and we arrive at a fair value of an intrinsic value of about $26 per share, which I think is a lot more reasonable for ARM Holdings. It would still put us at over 50 to 54 times earnings multiple because we are accounting for both free cash flow and earnings, but it's obviously going to be a 47% discount from where its proposed IPO price is. I've taken the mid-range, so $47 to $51 is the range. I've taken $49. That obviously does suggest a 47% pullback needed in order for it to be trading at its fair value, trading at its intrinsic value, which obviously, if you consider $52 billion or $52 billion market cap, and if we take into account, let's say 52 times 0.54, we're looking at a $28 billion market value, right? Valuation for this company. And I believe the SoftBank valued it at around $32 billion not too long ago. So let me just see if I can bring that up. I did remember reading something like that. Let's see. Okay, there we go. So SoftBank's acquisition in 2016 for $32 billion. And again, a lot of these private deals, they do happen, in my opinion, at least at a much higher price point. And you'll notice that the new target valuation of $52 billion is actually lower than the $64 billion last month, at which SoftBank took over 25% stake from its own vision fund. So again, the valuation was knocked down from 64 to 52. So there's already been a $12 billion discount. Not really discount, but it's been knocked down from those levels from last month. But even at $52 billion, it does seem like it is expensive relative to its earnings and, of course, its cash flows as well. So we don't have any listing yet, but, of course, it's going to soon become available. But I wanted to go over, share my research, share my analysis. I think it's got a lot of potential. It's, again, sitting at the starting point of the semiconductor ecosystem. And there's a lot of companies that actually do license their technology, license their designs and their IP. So there's no doubt in my mind that they're going to be successful long term. And look, with the current artificial intelligence and the current wave and all the hype around machine learning and artificial intelligence, it's possible that ARM stock goes from like 47 to 100, right, in the next few months because of all that hype. But that doesn't change the valuation. That doesn't change the earnings. That doesn't change the fundamentals. And that's what we have to really be looking out for, right? Yes, you can trade it on momentum. Yes, you can, buy and then sell at a higher price and have a short-term trade. But if you are looking to invest in the company, that's what this video is all about, right? That's so that's who the people are going to be watching this video, so you can better understand, okay, what's the intrinsic value? What's the long-term thesis for this company? And I've been very generous with a 30% growth and a 30% P multiple, and of course, a free cash flow growth rate of 25%. So let me know in the comment section down below, what do you think about ARM Holdings? And are you planning to buy this IPO? Let me know in the comment section down below. As always, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. Happy investing. I'll see you all in the next video.